Strategy CEO, we will sell Bitcoin for dividends if math demands. Strategy CEO Phong. Lu said the company will sell Bitcoin to pay dividends when doing so is accretive to shareholders, framing the decision as math over ideology. In remarks shared by CoinMarketCap on May 9, 2026, the line moves the company past the rumor stage of last week, when Chairman Michael Saylor first floated the option and puts a sell-to-fund dividends rule on record from the chief executive. Bitcoin traded at $82.18, blew 0.9% on the day, at the time of writing, with the market staying flat on the news. A policy, not a hypothetical. Saylor's earlier comments treated Bitcoin sales as a tail risk option the company would consider only under specific conditions. Le's phrasing is tighter. He said the decision is dictated by accretion math. If the dollar value created for shareholders by paying a dividend with sold BTC exceeds the dollar value of holding that BTC, the company sells. That is a formula, not a feeling, and it is the first time someone running the firm has stated it that way in public. Strategy's preferred funding stack has been convertible notes and at-the-market equity issuance, both of which let the company add Bitcoin without touching its existing stack. Selling BTC is a different mechanic. It runs the stack in reverse, and it concedes that capital markets cannot always deliver the cheapest dollar for the next dividend cycle. The dividend obligations behind the math. The pressure point is Strategy's preferred share program. The company has issued multiple preferred series this year, and each one carries a fixed dividend obligation in cash. JP Morgan analysts previously projected Strategy's 2026 Bitcoin buying at roughly $30 billion. But that number assumes capital markets stay open and equity stays priced above net asset value. If the MNAV premium compresses or equity issuance becomes dilutive, the cash-to-service preferreds has to come from somewhere. Le's math over ideology line is the answer to that. Where it has to come from is the Treasury. The framing shift, in plain terms Strategy's brand for 5 years, has been the loudest corporate maximalist position on Bitcoin. Saylor's public posture has been that the company is a buyer and a holder, full stop. Le's comment does not retract that, but it adds a clause. The company is a buyer and a holder unless selling is the cheaper way to honor a cash obligation. That clause has been present in the financial filings for as long as the preferreds have existed. Stating it from the CEO chair changes how it reads. For Bitcoin holders watching corporate flows, the practical takeaway is that a non-zero share of Strategy's roughly 600,000 BTC is now formally a contingent supply, available to the market when dividend math turns. The size and timing of that share depend on the company's stock price relative to its NAV, the cost of new debt and equity issuance, and the cash needs of each preferred series. Reaction in the comments: the framing did not land cleanly with retail. Replies on the original post split between shareholders welcoming the discipline and Bitcoin holders treating any contemplated sell as a violation of the original thesis. The phrase math over ideology is itself a tell. It concedes that the ideology was the point for some part of the audience, and that the company is now signaling those holders are not its primary constituency. Strategy's preferred shareholders are. The math runs through them.